Welcome to the AACFB's 2023 Meet the Funder webinar series. My name is Monica Harper. I'm the Executive Director of the AACFB, and I'll be your host. Our presenters today are Scott Hansen, Greg Emery, and Autumn Faust from AvTech Capital. AvTech Capital is both a funding source member and a platinum sponsor of the AACFB, and I'd like to thank them for their support. Before I introduce the team, I'd like to go over a few items to make this webinar more enjoyable and informative for everyone. During the presentation, you should see a Q&A box that allows you to ask questions. If you have any questions during the presentation, please submit your questions in the box and they should be answered by the end of the webinar. Please reserve the chat box for the communication between attendees. The entire webinar should take no more than 30 to 45 minutes. And for those of you who would like to view the webinar later, it will be posted on the 2023 Meet the Funder page of the website, and it will also be emailed out to the membership. At this time, I'd like to turn it over to the team. It is all yours.
Thanks, Monica. As she mentioned, my name is Autumn, and I am presenting here with Greg Emery, and we also have Scott Hansen. And I'm pretty excited. This is my first AACFB webinar. So I just wanted to get started. And as I mentioned, I've got Greg and Scott here. Greg is our Vice President of Sales, and then Scott, you may have seen at previous conferences and whatnot. He is one of our senior account managers. And my name is Autumn. As mentioned, I lead the marketing and business development team here at AvTech, and I'm sure that you've seen me at some conferences, but hopefully more in the future. We're really excited as we are growing our new team and implementing this new team that we have here. And a little bit about AvTech, I just wanted to dive in just to give everyone sort of an idea if you haven't heard of us before. We are located in Cottonwood Heights, Utah. We love it here. We've got a pretty good view of the mountains back of us. And we were founded in 2002. We currently have 65 employees. We are growing so fast. We have implemented our marketing and business development team as well as our revenue operations team. We have a lot of changes coming and a lot of growth that we're really excited to share. And I wanted to start with a little bit about AvTech on a deeper level and what our purpose is and what we truly care about. Just as you'll see it throughout this presentation, our purpose is people. That's what we care about. We care about our employees. We care about our customers and continuing those relationships. That is our highest priority. And whether that's for personal development, career development, we really prioritize that overall. Now, as far as our purpose and continuing that with our customers and our brokers, did you have any words you wanted to say on that, Greg?
Yeah, one of the things we've been really focusing on, I've been here since 2004, coming up on 19 years this summer, is our why and with our customers and our partnerships and broker relationships. It's helping you accomplish your why. And that's just as Autumn mentioned, you know, the people, not just here internally at AvTech Capital, but also with our partners and associations we're involved with, but ultimately our customer. We're kind of tied at the hip. I always like to use that analogy, and we're very focused on rapport and relationship. And that's one of the big focuses, just from a culture standpoint, that we continue to, you can always get better at that. That's one thing that we have found over the years, is we can always get better at focusing on that. And when you're lending, you know, when you're a lender, there's a lot of things that go into that. And, you know, keeping our focus from our president and CEO on down, you know, through our whole chain of all departments across the board. That's one thing we really do focus on and try to meet and implement. Scott, I don't know if you want to touch on that as well.
Well, yeah, I think from our thinking to our physical processes, we're very customer oriented, meaning that our brokers are our customer, and the business you bring to us through the broker channel become our customer as well. And our effort and our goal is to be efficient and quick about what we do, take care of your needs, take care of the customer, the ultimate lessor or lessee's needs, and, you know, fulfill our responsibility in a very responsible and an efficient way.
And within that, I think we've, as many of, you know, people joining here as well, and with the association, have really good friendships and relationships just outside of just, you know, the the paper that you're funding transactions off of. And that's pretty exciting. And one of our focal points, and really focuses, we try to focus on that on a day-to-day basis. That's ultimately one of our goals. And so hopefully we can show some of the things that we have in place as, process and kind of our thinking along with that as we kind of go through and talk about kind of our processes and who we are.
Awesome. All right, I am going to turn it over to Scott, and he's going to introduce our senior account managers and a little bit about our broker program.
Okay, great. We've got, as you can see here, we have 4 senior account managers, all dedicated to managing broker business and helping to meet your needs. You've probably seen or met or passed in the hallway, one of us or all of us at previous shows. We are involved in AACFB, NEFA, and our credit department's involved with Alpha, but we try and we're trying to become more involved and a responsible member to the organization. But anyway, so any one of us are capable of helping you. I know that you may be familiar with one of us and work primarily with us. That's great. If you have a contact, whether it's Rick or Jason or myself or Scott Stone, you can feel free to call us directly, or you can work through our business development group, Autumn and her team, and get to us either way. I know that we do have an online application, which is very simple, primarily for new brokers coming in. Existing brokers, who we are, and we've worked together, you're in our system. But if you're a new broker and looking to engage with us, there is a brief online application, which gives us basic information. And at that point, our business development group will coordinate with you and get you in contact with one of the 4 of us so that we can follow up and begin the process. We do have a broker agreement we use. It's just a basic, essentially a legal document that represents our relationship with our brokers in regards to what our responsibilities are, what our individual responsibilities are, compensation, those types of things. It's pretty simple, 1 page. Any one of us can send that over to you by email. It can even be sent by DocuSign, but so it's pretty simple and straightforward. And that's something that we can get to you easily at your request. I also want to touch on an aspect of our agreement, the non-circumvention. I know that there have been issues in the industry in the past, which I think are being corrected and should be corrected, if not already. But we're very vocal and very dedicated to our relationship with brokers. And in this case, non-circumvention. The way our system is set up is that when you bring us a deal and we put it into our system, your brokerage is connected to that account, so that if additional feedback comes or we complete a schedule and a second schedule pops up, whether it's directly through us or whatever, your name and your brokerage will pop up as connected to that piece of business, so that essentially we have your back and you're covered. And if subsequent schedules do occur, you will be compensated on those schedules according to the policy and the referral agreement that we have here. So if you have any questions on that, note them, and Monica can present those at the end of the session. But we do work hard to take care of our relationship, in this case, our broker relationships, and make sure that you're compensated properly and continually throughout our relationship together and with the clients you bring to us.
Now, something I wanted to just touch on briefly, just from a marketing standpoint, we have ensured that our online application for our brokers is really just a simple way to collect your basic information. We don't have any strict broker qualifications or requirements that are needed. As Scott touched on, we have that broker agreement in place for our broker partners to protect them and to ensure that we're a good fit, they're a good fit, and everyone's best interest is in mind.
Okay, as regards our funding parameters, in simplest terms, we are a mid-ticket funder, meaning that we focus on the larger transactions for larger companies. Our minimum transaction size is $250K, and we can fund upwards of 10 million plus. The sweet spot or the core of what we do is typically between 500 and 5 million. But we can do larger deals, and we can do up anything above 250K. That 250K doesn't have to be in a single transaction. Often we have customers come in that have multiple projects coming up over a 3-6 month period. We can approve it at once as a single, but then we can break it out. We can do schedules for the separate projects and fund it over the time that's required. Annual revenues, as far as our customers, we do look to bring in customers that are making a gross income of at least 10 million. If it's less than that, we can certainly look at it, in the 7-8 range. We can look at it and see if it's something we can get done. But primarily, we are looking for lessees that are in the 10 million plus annual revenue category. Our funding is typically A and B credits. C's do come in, and they're really tough, as everyone knows. There's always, some pretty heavy structuring that goes on in a C credit, just because that's the nature. But so our primary focus is on A and B credits. Essentially, one of the things that I think doesn't necessarily set us apart, but does distinguish us, is that we have the flexibility and the ability to fund in nearly all industries and all types of equipment. There are a few that are more difficult. As you know, right now, cannabis can be a challenge. Bitcoin has become a challenge. There are some other industries that are up and down as far as their profitability that create some challenges. But in general, we are funding in all categories of business and all types of equipment, anything from IT related to tenant improvement to FF&E, hard equipment. So we offer a great deal of flexibility, and we can help you in nearly every opportunity that you come across that fits these parameters.
Oh, thanks, Scott. And one of the things that I can really talk about with some passion, as well as our team, as Scott talked about, with himself, Scott Stone, Jason Kazera, and Rick Roberts, and then Autumn and our business development side of things is really that focus on culture and relationship. And we're in the weeds on these transactions. We're very aware from a management standpoint as we all work with our groups. So I just wanted to point that out. I know it's going back a couple slides, but we really do have some really tenured employees as well, with, as you saw in the slide before, that been here 10 plus years, which is a huge advantage as we work on these transactions. So as Scott had touched on, from an industry standpoint, we touch all types of industries. One of the strengths that we really do have, and we saw this during COVID, and really a lot of our customers benefited from this, is our portfolio is pretty diverse. We fund all types of industries. What that did for us is different industries are hit by different economic challenges, or COVID was obviously a big surprise to everybody, and how that was going to happen. The things we were able to do during that period to help customers out. But one of the things that really showed just the strength of our portfolio is we didn't have just all of our transactions in one industry that really got affected. So that's one thing that I always like to point out when we're talking about what we do and the scope of what AvTech Capital is. We can look at every transaction on an individual basis. As Scott mentioned, some of those outlier, tougher industries of crypto and cannabis, and sometimes transportation can be as the economy and inflation hits, and across the board, on all types of collateral as well, and anywhere from software and implementation. We've done like emergency medical record projects with hospitals. I mean, that's pretty much as soft as you can get from a software standpoint, all the way up to aircraft. We do aircraft transactions, probably almost 17, 18 years ago, I was involved in one of our first aircraft transactions, involved in like the FAA process. So we got our documentation set up that way. We always have a good booking of aircraft in our portfolio as well. So one of the things that we really focus on relative to this is we have relationships or opportunities that come to us. One of our real goals is to make sure if it's not going to fit in our box, and if it's something that's way out there, we'll look into it, see if there's the ability to put something together. If not, we don't want to spin anybody's wheels, but we won't just say, oh, we won't look at anything in this industry. But as economic times kind of drive, different forces within just lending in general, we'll make sure that we're up to speed on that. We communicate kind of daily with that, with our whole company, really, and especially on the sales side of things. So so from an industry standpoint, that is one of the strengths, just relative to our portfolio as well, that I always like to point out to existing customers, partners, broker relationships as well. Kind of tied into this as well is talking about our lease options with our products. We do traditional leases as far as like open residual or fair market value type leases. We do your traditional dollar buyout or puts. We even have an equipment finance agreement facility that we can fund transactions documentation wise under an EFA. One thing that we've seen with the equipment finance agreements, sometimes under sell and lease back transactions, that can help companies from a tax event standpoint if it's monetizing assets. And then all these things, as everybody's aware, relative to tax and accounting, that's always something that's at the forefront for our lessees. And again, back to that, what's the best for the lessee? Let's try to put something, a transaction together that's going to meet their needs. And one thing that I always like to talk to relative to our different options is under a traditional lease, you can have a lower payment. So maybe a company, because of a contract, needs a lower payment, so we can put a balloon. Or if they just want to make sure that they own it at the end, we can do a dollar buyout as well. The nice thing and the interesting thing with an equipment finance agreement is you can actually both have a balloon and a straight payout. And so there are options there. One item I wanted to point out, a modified PER or modified open lease or fair market value, that's if you put a capped residual in there where they want a balloon, but they want to be able to have a cap in there. So I wanted to touch on that just briefly as far as our lease options, but I think the key goes back to the customer, what makes sense with them. And that will kind of tie into our next slide as we kind of go into kind of our process. And this is really where hopefully this makes sense leading up into the discovery call. We found that the sooner we get in front of the customer along with our broker relationship or consultative relationship and be able to take that approach, the better off we are. We've even found that a video call even more beneficial. We've seen over since COVID, as more people were working remote, that was a little bit more transitional for a lot of companies, even ourselves, to be able to transition to that as people were working from home or remotely. And that does, and also just provides the tangibility that there's a real Scott Hansen behind the transaction, or myself or Autumn, as a team. And that's as you look at the number one discovery call, that's probably one of the biggest focuses. Again, let's be transparent about who we are. But in cases where we have to manage that, we understand sometimes there's unique scenarios that's a little bit more difficult. We're open to having those conversations, some of the challenges that there may be relative to your customer and lessee. And so item number one is that kind of leads to that is our one-page application form. This is an example of our form. And the whole idea behind this is to, as you see, a lot of really simple one-page document. The idea is I come from a sales background, so and as we submit transactions to credit, I think it's you know, I'm vulnerable there to understand that, hey, we want to make sure we get a transaction in, get it turned in, and be as transparent and try to move that through that process as much as possible. That's the whole idea with this application form, where it's got all the entity information, ownership, you know, on down to, you know, references, equipment, and then down below there's check boxes they can even reference, hey, this is our, you know, ideal term and structure. And then even less, you know, the financial information and details of what we typically see on a transaction. That doesn't say if they don't have some of those items, there's typically an explanation why, for example, if they didn't have projections or something along those lines. So we've been really excited about this. It's really worked well. Ideally, the, you know, sooner you can get that out in front of the customer, we found, you know, the ability to kind of move that through. And again, be in full transparency of this is what we're going to need to move it to the next steps and get to a proposal. And so back to, you know, the process side of things, this has been in probably the last 24 months, one of the biggest, we've implemented Salesforce to a little bit more, we've had it for a while, but, you know, to more of a, you know, more robust use there. That allows us to kind of go in, we generate all of our, you know, LOIs out of that. And then, you know, relative to even the broker agreements and, you know, making sure we're tracking that information relative to the, you know, the individual companies and relationships that we're working with that we have on there. And then back to the, you know, the second bullet item, as far as that one-on-one discovery call, that really helps that where you can lay out and say, hey, this is kind of, you know, our starting process is right there, but we can also, you know, navigate, you know, through that. And we're, you know, Scott and all of us on our team, we're very, you know, flexible there. So the whole idea is the next section on a transaction is to get a transaction into credit. And on our end, our whole goal is to have it as clean as possible, which means, you know, we're not gonna just try to, you know, we don't want to piecemeal information back and forth as much as possible as we don't have to. You know, from a credit standpoint, we got our own in-house credit team. I personally meet with our credit team every day.
He's
so
telling the truth.
Yeah, we're a very, very flat organization. So pretty much every afternoon we have a block cut out. So, you know, what that really resonates for, you know, our partners and our lessees is that they're not just transactions on a report for us. We want to get these transactions done. We know that there's a real need. And it's not just, oh, well, we've got a signed deal and let's high five because we're in sales, right? We want, and we have a responsibility too, to make sure that, you know, as we, you know, use our bandwidth from a company standpoint and, you know, with, you know, everybody that's involved throughout our entire company, all departments, is we're very cognizant of that. So in-house credit team, very flat organization, which allows us to really sit and talk about, you know, each credit and transaction. And you know, what that, you know, fosters, you know, hopefully is faster approval times, response times, again, transparency. Where are we at on the transaction? One of the biggest things that I know Scott and our senior account managers do a really good job of, and that we continue to push, is out of the gate, this is where we're at in the process. This is expectations. We don't want to set improper expectations, and you know, make sure that the customer is very aware of kind of where we're at on the transaction. And again, transparent and consistent credit policies. And again, that one-page document allows us to make sure that, hey, if we got this information, we should be able to move it into the next stage. So discovery call, you know, from there, you get a LOI out, you talk about, you know, terms, structure, you kind of put a transaction together, you get a transaction signed, set the expectations, usually within, you know, our expectations, once we have a transaction turned into credit within 48 to 72 hours. I'm on the sales side of it, so I love 48 hours if there's any questions from our committee. We really try to live by that. And then from there, our committee meets, and typically we're just really depends on where that's at. Usually a Tuesday and Thursdays, usually a big committee meeting timeline. This week, because it's a short week, we kind of moved that to Wednesday, Friday. But even within as transactions get turned in, it's not necessarily exactly that timeline. But again, we want to make sure we're upfront and communicate to our partners and to our customers as far as expectations there. The next stage is really, once we have a credit approval, we hand that off. We send out the approval letter with any conditions, and we hand off to our documentation team and funding specialists. This is probably one of the best things that we've done in the history of our company. I've been here almost 19 years, is our funding specialists in our process. And it's really allowed us to, we've had significant growth even through COVID because of some of this implementation. So what it allows us to do as your partners and with our other customers is on the sales side of things, really focus on their needs. Is there additional funding, opportunities for us to work on, and then we have a handoff to our funding specialists and doc team, and they kind of take it from there, work that through, vendor coordination, inspections. The nice thing is we do, most of our inspections are now done virtually, which is nice. Every once in a while, if it's a unique asset, we'll still do an on-site inspection. But during COVID, that was probably one of the biggest advantages for us, is we'd actually pivoted to that and already had some things in place there. And we kind of just grandfathered that in after some of those restrictions, were in place from COVID. Anything you wanted to touch on that? Autumn actually was one of our pioneers out of that department, and it shows just how she really does understand the scope of the business, which is awesome from a business development standpoint. Anything else that you want to touch on there? Because you were really the pioneer from that standpoint.
Yeah, absolutely. I would say I'm a little young to be a pioneer, but that's okay.
That's true, yeah.
I'll take it. It's fine. But as Greg mentioned, I helped form our documentation and funding team, and then more recently transitioned to our marketing and business development team. So just in that aspect, and what we've done is we've almost, I think, tripled or quadrupled our funding team size. So we've really done a lot of work to expand that team and expand our bandwidth in order to improve our response times, funding times, get vendors paid, communicate faster all around. And I think when we talk a little bit more about our growth in the coming slides, I think it'll show in our numbers how much we've grown as a company, whether that's employee size, funding size, or just our overall bandwidth in the past couple of years is something I think we all should be proud of.
No, that's awesome. I couldn't talk about that without bringing Autumn in, and it's really been one of the the biggest advantages that we've had, and we just been able to look at that and say that's been such a big part of our growth over the years. So, and again, tying into that next section with approval, that really transitions into documentation with DocuSign. We do titled vehicles, all that's kind of involved there. And then, from a funding standpoint, the idea is to move from approval to funding as soon as possible. And that's where, we follow back up with our partners, obviously, and notify you that, hey, yes, transaction's funded, get you the information to get, your fee invoice over to us and all those types of things. But we're very hyper-focused on funding. Every week on Wednesdays, in fact, I had one earlier today, we have a credit status report meeting. We go through every transaction, and our full doc team and our credit department's in there. So again, I just always like to point out, because I think that's important, and what we live on a day-to-day basis is really, and what reciprocates to you guys' success as well as a partner and with our lessees and our customers is to get deals to the finish line and get funding. Because one thing is sometimes we do forget, or it's easy to forget, is our lessees do need their equipment, their servicing contract, they're paying salaries. That's why that why matters so much if we concentrate on that on a deal by deal basis.
All right, I just wanted to touch briefly on what we have coming up. As I mentioned, our business development team and marketing aspect of what we're doing here at AvTech is very, very busy. We have a lot in store. We're very, very excited. We will be at the NIFA Funding Symposium in San Antonio. We're also going to the next AACFB conference, that expo in Orlando, as well as the ELFA annual convention in Phoenix. We are very excited, and we've been doing a lot of giveaways. I think this last conference, we gave away an iPad, we did AirPods, we did a Scotty Cameron putter, which I'm told is a cool thing. I don't know much about it. But we have been really working hard to be more involved, whether that be just in this industry and in our community in general. And we are very, very excited for what's to come. And we just wanted to wrap up. It looks like we have a couple questions that Monica can direct to Greg and Scott Hansen. And then you will find a broker desk email available for future contact and other questions. You're welcome to reach out. That will go to myself directly and my team member Tessa, and we will help coordinate questions and whatnot.
Right. Yes, you do have a few questions. So first question is, what are you looking for in terms of equity injection and DSCR?
Yeah, so I mean, we typically go into transactions as 100% financing. If a customer comes to us and wants to put a down payment and they don't want 100% financing, then we can obviously accommodate that. Or if the credit warrants or the transaction warrants needing to have some type of loan to value that's not 100%, we can definitely put that together. Ultimately, we're gonna be very cautious as we look at those types of things to make sure, okay, is this something that's going to allow us to get the transaction to the finish line? But I would say our standard, we never go into a transaction unless we're asked up front, or if it's looking at the collateral or the transaction and saying, oh, we only want to finance 80%. That's more of a banking, they want to have 20%. That's kind of more of a traditional banking approach, where we go into it. And that's one of the benefits that we bring to the table is we want to provide 100% financing. When and if possible, do we do down payments? Of course we do. But sometimes I would say in my experience, most of the time that's driven from the customer standpoint versus from AvTech's standpoint.
Okay. Do you work with Prerevenue?
Yes. Yeah. Prerevenue is always, we probably do a handful or, I would say a handful or less pre-revenue transactions. And a lot of the devil's in the details, right? I mean, usually pre-revenue transactions it's cash burn tied to equity raises. They definitely fall in that structured finance bucket. And so, we have done transactions in the millions of dollars that fit in that. I would say, we'll look at every deal and look at it on its own merit. And a lot of that, again, is, as you look at, a lot of the pre-revenue transactions are, okay, what does their opening balance sheet look like? Do they have a cash burn? Do they have equity raises in place? Is there contracts? there's a lot of variables that go there. One of the first things we looked at, okay, is it a pre-revenue? And is there any other companies involved that can provide a corporate guarantee? Is there a personal guarantee that could provide some? So there's a lot of variables that go into that. But yeah, we'll look at pre-revenue, but it's not, one thing we're very cautious is we do not want to spin wheels because we don't come in and we don't bring in and say, hey, we want to be an equity partner. We do not do that. So that's probably one of the number one questions that come over on deals that are pre-revenue is we're looking at an equipment finance transaction and not looking to be a equity partner in on a transaction. And so the other variables that go into those transactions are the things that we always ask because we do have the ability to get those transactions done into the finish line, but we also don't want to spin anybody's wheels.
Sure. Joseph wants to know what your buy rates are.
So I guess from a buy rate standpoint, we've got our we fund our transactions in a variety of ways. Really, the all-in rate to the customer is going to be driven based off of their credit profile. And internally, we've got various avenues. We have a line with Capital One that we fund a lot of our transactions off of. And we, a lot of different variables that go into how we fund our transactions. And so that can vary based off of the transaction, how we want to fund it. But, the all-in rate from a customer standpoint, as everybody's aware, interest rates, treasuries, swaps have all gone up. And so with that's one of in fact, Autumn presented at one of the last conferences, selling in a high rate environment. And so, again, being transparent and talking about, we can still be in the, higher single digits, on better credits, depending, and again, there's a lot of variables that go into that. And, every deal is just going to be funded, and that buy rate is going to be based off of the credit and the underwriting on that specific deal.
Hey, I think the next one, it's this commission op. I don't know if that's commission option or opportunity.
Yeah, Scott, do you want to touch on that?
Sure. Again, commissions are typically based on margins and what's available in a transaction. If we have a deal that we're really taxed on and the customer is pushing for the lowest rate they can get, and there's not a lot of margin, then we have to work together on that. But typically, up to $1 million in funding, we'll strive to price a deal so that a broker can get 3-4 points. Beyond that, again, it's going to be purely a function of margins and where the rate is and what's available. But our goal is to take care of our brokers and make sure that repeat business comes to them, and we work together and we all succeed. So it's something that we're focused on, and that we want to be cognizant of your needs. When you're funding say a 500, a million, a $5 million deal, the commissions add up a lot quicker than when it's a 5K, a 25K, or even a 50K deal. So we work really hard to make it meaningful for the broker, but also make it meaningful for the lessee, and not inflate a rate just so that everyone can make more money. We work really hard to meet the needs of all the parties.
When I think repeat business, Scott has done up to 15 schedules with the same company in like a year period. And so I think there's some of that transparency. Again, we kind of have a expected schedule based off of kind of, dollar size. But again, we're very flexible looking at it. But I think to Scott's point, we're not small ticket, we're in that mid ticket range. And again, we're never going to go and at the detriment of the lessee, go and put more points than what we need or our partner would need. And then the customer is stuck, and then, it affects them and their ability to run their business and get their ROI in equipment. So that's where being transparent and being upfront. Also, a lot of the repeat business, I think that's one of the big focuses, because similar to AvTech with our partners, the customer acquisition cost, we are very aware of that as a company, and have been since I've been here for almost 19 years. Similar to with your relationships, we understand that we want to utilize your relationship, but that's one of the things I can just speak to a lot of the transactions, both with, and it ties back to, Scott and Rick and Jason and Scott Stone. As long as they've been here with AvTech, is they're really wired that way, is having that understanding is, your customers are our customers, or our relationships are your relationships. And so, a lot of times I've even used the analogy of something is better than nothing of nothing. And especially, back to the buy rate, at the end of the day, if the customer, and we need to peel back our margins on it, and our partner, broker does too, then sometimes you look at that and you're like, okay, well, we can get some repeat business out of that. We've lived that reality, to where we've done a lot of subsequent business with customers that we've done, schedules in the teens, over like a pretty short period actually, and long term. So
Yeah, let me just clarify something really quickly. As a mid-ticket lender, and by our as a result of the type of underwriting we do and the credit writing we do, we are not a high interest lender. We strive really as much as we can to keep our rates in the single digits. Sometimes it runs into the low teens. There are outlier situations where it may run higher than that, depending on the credit and the type of equipment, but we're really structured and desirous of being very competitive. And we definitely are not a high interest lender. Just want to make that.
And I think part of that is we have the A investment grade credits, billion-dollar revenue companies that we work with. And then, the nice thing, and sorry for going on as far as but it is something we're very passionate about, and I think ties into this question, but hopefully for everybody tuning in, it makes sense, is the ability to get, additional funding out with a customer that does, $10 million to $20 million in revenue versus a company that does 200 to 500 million or $1 billion in revenue. You're going to probably have some repeat business. So if that means upfront being a little bit more conservative on return, that is just shared between the parties. So I just wanted to point that out.
All right. It looks like that's all the questions that we have. So did you guys have anything else you wanted to go over?
I would just say we appreciate, the association, all the relationships, some of our, partners. We really take a consultative approach. We appreciate the opportunity to work on, like I go back to the, relationship. We understand those relationships. There's a lot of other things going on there. We appreciate the opportunity and the trust put in us to come and be involved in those transactions and relationships.
Well, and we appreciate your support of the AACFB. With that, I want to thank all the participants and especially our valued funding source and platinum sponsor, AvTech Capital. Thanks for a great job, guys. We invite everyone to meet with AvTech in person at our expo in September 20th and 21st in Orlando, Florida. And thanks again for joining us, and have a great day.
Thanks.
Thank
Thank you.
Bye now.